Picture this with me. A recent home buyer in Toronto is making mortgage payments on a house that's worth thousands less than what they paid. They are not statistics. They are one of many. A quiet wave of underwater mortgages is sweeping across Canada. In this video, we are pulling back the curtain on the markets deepest in the red and revealing who's most at risk and exposing the financial trap that is snapping shut on home owners. For years, the foundation of Canadian household wealth felt unshakable. As long as you owned a home, you were making money. But that's the sense of security is cracking. We have entered a period of major price correction, and it's pushing a fast-growing number of Canadians into negative equity. This nightmare scenario where you owe more on your mortgage than your house is actually worth. Let's look at facts. The average home price in the GTA area as of March 2026, just over $1 million. That price dropped 7.1% from last year. And the benchmark price, which tracks a typical home, dropped even harder, 7.9%. And the story is similar in Vancouver. The benchmark price dropped 6.8% year over year. These are not just numbers on a page. Think about it this way. If someone purchased $1 million home and put 5% down payment, that's about $50,000 worth of equity. A price drop of 7.1% does not just sting. It erases completely their equity. It put them $20,000 in the red. This is not just a theory. It's the new balance sheet reality for thousands of recent homeowners. So who is getting hit the hardest by this equity wipeout? The data all points to one group, recent buyers. Anyone who purchased a home in the last 5 years, right around the market's peak, is facing extreme risk. Some analyses are even suggesting a staggering 86% of these buyers could find themselves underwater as prices keep adjusting. This creates what I call the seller's trap. If you are underwater and life happens, you need to move for a new job or your family is growing, you cannot. To sell your home, you would have to bring a massive check to the closing just to pay back the bank. So you are trapped. The signs of this financial stress are impossible to ignore. In Ontario, there has been a huge spike in power of sale listings. And this is a clear sign of homeowner distress. And it's just not anecdotal. CMHC, Canada's National Housing Agency, has stated that mortgage arrears rates are projected to keep rising, flagging Toronto and Vancouver as the markets most at risk. In fact, one report from early 2026 showed that Ontario's mortgage arrears rate has already climbed past the national average. By the way, I'm Ilham Ibrahim, a real estate agent here in Vaughan. I help families navigate the buying and selling with a clear and simple real estate guidance. If you would like some help or want to chat with me about your situation, click the link in the description below, or we can grab a coffee. This is not just about individuals, homeowners getting squeezed. It's a systemic problem. The Canadian household debts has swelled to over $3 trillion. And as home values fall, the collateral that backs that mountain of debt shrinks. And you can bet the banks are getting nervous. In response to that, we are seeing a freeze in home equity line of credit. For years, Canadians treated their homes like ATM machine. But now banks are using fine print clauses to slash or freeze the home equity line of credit limits, and often with no warning. They see falling home values, and they are moving fast to protect themselves from over-leveraged clients. At the same time, new federal rules are tightening access, making it tougher to borrow against your home if your debt gets above 65% of its value. This is a double blow. Not only is your home value dropping on paper, but the cash that you thought you could access is vanishing. And this is all happening as mortgage delinquencies are already on the rise. In Toronto, the rate of mortgage delinquencies has more than quadrupled from its past pandemic lows. While the overall numbers are still low from historical standards, the trend is clear and it's pointing straight up. So if you are a homeowner and you got caught in this seller's trap, what are your options? The path forward is difficult, but understanding it is a key. The first and perhaps the hardest strategy is to stay put and wait. Some forecasts suggest the market could stabilize. This approach requires building significant financial buffer to weather the storm, meaning a serious stress test of your personal finances. If waiting is not an option because life forces a move, the alternative is stark. You have to face the balance sheet reality. This means preparing to bring a check to the closing table to cover the difference between what you owe the bank and the lower price your home will sell for. It's a massive financial hit, but it provides a way out. The goal is to avoid being a statistics in the mortgage areas or the power of sale figures. Being proactive is your only defense. This means understanding your financial position down to the dollar and knowing exactly how much equity you have lost. The era of easy home equity is over, and the survival in this market requires a hands-on, defensive financial strategy. Let's put it all together. First, falling home prices in major hubs like Toronto and Vancouver is wiping out homeowners' equity. Second, this is trapping a recent buyer with a small down payment, leaving them unable to sell without taking a huge financial hit. Finally, this pressure on individuals is creating a risk for the whole system. A massive household debt, rising delinquencies, banks tighten up credits, all combine to create a fragile economy. I'm curious to know, what are you seeing in your local market? Let me know in the comments below. And thank you for watching, and I will see you in the next video.